Hi guys, earlier this year, Silicon Valley Bank announced that it needed to raise $2.2 billion, which sent shockwaves throughout the banking industry.
Of a collapse of a big bank and the anatomy of a rescue from the federal government. Let's look at how we got here.
The bank halted trading on its plummeting stock, causing investors and depositors to panic and withdraw their money. Regulators had to step in to prevent SVB from shutting down, and they even had to resort to seizing its deposits. This became the largest banking failure since the 2008 financial crisis, and the second largest in US history.
Well, I've got to say our banking system is a safe and a sound one. And since the days when we've had federal deposit insurance in place, we haven't had a depositor who's got less than $100,000 in an account lose a penny.
This news raised rumors about what this would mean for venture capitalists, the tech industry, startups, and for so many bank customers nationwide. In this video, my goal is to break down the 5 tips you need in order to protect and secure your money against the Silicon Valley Bank crash. Before we get into the video, let me ask you this thought-provoking question. What if you woke up one day to find out that your bank has gone bankrupt and your lifelong savings have been lost forever? You see, this is a nightmare that nobody wants to think about, but it's a possibility that we need to prepare. But despite this potential risk, there are still steps that you can take today to protect your money and minimize your exposure to the fallout from the Silicon Valley Bank crash. There are 5 tips to help you do just that. Let's go. Alright, number 1, keep an eye on your bank accounts. Let's say you're a Silicon Valley Bank customer. You may think that your deposits with the Silicon Valley Bank or Signature Bank, which is one of the other banks that actually crashed, are already safe and fully covered by the FDIC. But it's still important to keep a close eye on your accounts. In fact, this is one of the most basic things that you can do to protect your money. My advice to you guys is to check your balances regularly and monitor any transactions or fees that may be posted to your accounts. For instance, if you notice any suspicious activities, it's best to report it to your bank immediately. Now let's look at this financial example. Imagine if you had $10,000 in your savings account at Silicon Valley Bank. If that bank were to fail, you would still be able to recover from all your money up to the FDIC insurance limit of $250,000. However, if you have more than $250,000 in deposits with the same bank, then you might want to consider spreading your money across multiple banks. Number 2, diversify your investments. Investing in a single company or industry can be risky, especially if that company or industry is experiencing financial turmoil. So guys, to minimize your exposure to this type of risk, it's very important to diversify your investments across multiple companies, sectors, and regions. For example, if you have $10,000 to invest, it might be best way to consider allocating 50% to stocks, 25% to bonds, and 25% to mutual funds that represent a broad range of industries and geographic regions. Let's use the same example. Let's say you had invested that same $10,000 in a single tech company that experienced financial difficulties. You would have lost all of your investments. However, if you had invested that same amount of money across multiple companies and industries, you would have been able to minimize your losses. By the way guys, if you enjoyed this video so far, I'd love it if you can give me a thumbs up, as it would help the YouTube algorithm share my video to more people just like yourself. Alright guys, let's move on to the next tip, where I'll share more tips and ideas on how to protect and save your money against the Silicon Valley Bank crash. Number 3, stay informed about the market. I'm sure you guys have heard this saying about knowledge is power. In this case, knowledge is power when it comes to investing. So by staying up to date on market news and trends, by regularly reading financial news publications, following financial experts on social media, and attending financial seminars or webinars, the information that you get from all these resources can actually help you make informed investment decisions, and you can adjust your portfolio as needed based on market conditions. Here's a financial example to illustrate my point. Let's say that you had invested in a stock that was performing well, and let's assume the name of the company is Glassware, and Glassware makes this kind of beautiful light bulbs with the flower inside and the pebbles, and also with the light inside that you can turn on and off. However, if you've been keeping up with the market news, you would have realized that the company was facing some challenges, and you might have sold your shares before the stock price dropped. And you might be thinking that the company that makes this kind of product actually does well. However, if you have been keeping up on the market news, you would have actually realized that the company was facing some challenges, and in so doing, you might actually want to back up from buying that company's stock. Number 4, consider working with a financial advisor. Guys, if you're not comfortable managing your investments on your own, consider working with a financial advisor. You see, the financial advisor is a professional that can help you develop a personalized investment strategy that takes into account your financial goals, risk tolerance, and time horizon. They can also provide valuable guidance and advice during times of market volatility or economic uncertainty. So let's look at this example. If you have $50,000 to invest, you might be tempted to invest all of it in a single stock that you think it's going to do well. However, a financial advisor can help you develop a more diversified portfolio that can spread your investments across multiple companies and industries. Number 5. Don't panic and make impulsive decisions. Finally, it's a priority to resist the urge to panic and make impulsive decisions in the response to market volatility. Selling all your investments during a downturn, for example, can result in significant losses, and this will prevent you from benefiting from any eventual market recovery. What do I mean by that? It's best to focus on your long-term financial goals and stick to your investment strategy. Remember that markets are cyclical and volatility is a natural part of investing. So let's say, for instance, that you had invested $10,000 in a diversified portfolio of stocks, bonds, and mutual funds. All of a sudden, the market experiences a significant downturn, and then you see your portfolio value drop to about $8,000. You start to panic. Oh my gosh, what do I do? No, you don't have to panic. Obviously, your first instinct is to sell all of your investments and move your money to a safer place like a savings account or a CD, which is a certificate of deposit account. But actually, if you do that, you'll be locking in your losses and missing out on the opportunity to benefit from any eventual market recovery. Instead, this is what you should do to stay on course. It's best to focus on your long-term financial goals and trust in the diversified nature of your portfolio to help you weather any market turbulence. And there you have it, guys. By following these 5 tips, you can protect your money from a Silicon Valley bank-like crash and position yourself for long-term financial success. Remember to keep an eye on your bank accounts, diversify your investments, stay informed about the market, consider working with a financial advisor, and resist the urge to panic and make impulsive decisions. Alright guys, I hope you found this video very helpful and informative. If you have any questions or comments, please leave them below and I'll surely respond to you. And also, if you've enjoyed this video so far, make sure to smash the like button and don't forget to subscribe to my channel for more informative content like the one you just watched. Also, click the notification bell to be notified each time I upload a new video. Until next time guys, always stay money smart. Thanks for watching and I'll see you guys in the next video. Bye.